Insider Asia has selected OKA Corporation, which manufactures precast concrete products, as the stock of the day. Why does the research team like this company?
Well, firstly, we like the company for its exposure to Malaysia's ramp up in infrastructure spending. And secondly, OKA has got some pretty good fundamentals as well. OKA's competitive advantage actually lies in its numerous certifications, including those from the Public Works Department of Malaysia, National Water Services Commission, and Serum QAS International. What this means is that it allows OKA to actually supply to major infrastructure projects around Malaysia.
So OKA could actually be in a very sweet spot this year, what with the construction sector being in a hot seat and also with the 11 Malaysia plan to be tabled in 2 weeks' time. But first, let's get to its earnings trajectory. How are OKA's historical and current earnings looking like?
Well, historically, OKA's revenues have been growing steadily from about 103 million ringgit in financial year 2010 to 145.4 million ringgit in financial year 2014. In this same period, net profit has expanded from 3.9 million ringgit to 13.4 million ringgit.
What about its fundamentals? You mentioned that it's strong and that's why Insider Asia liked it as well.
Yes, actually over the years, OKA has pared down its debts. So basically its net gearing has dropped from 17.8% in financial year 2010 to just 0.18% as at December 2014. Management has actually indicated that it's quite conservative and does not really have any plans to leverage up moving down the line.
Looking ahead, are there any near-term catalysts for OKA?
Well, for any construction company, this really depends on the infrastructure projects. Near-term catalysts will come from proposed infrastructure projects like the 5.9 billion ringgit West Coast Expressway and also the 27 billion ringgit Pan-Borneo Highway. OKA should be well positioned to benefit from these projects because of its track record of participating in the major infrastructure projects that I mentioned earlier.
Now, this is not the first time Insider Asia has featured OKA. Since it first highlighted it back in January this year, its share price has climbed quite a fair bit. With that in mind, how are its valuations looking like now?
Well, actually, OKA, when we first featured OKA on January the 9th this year, and it was 80 cents. Since then, it has since risen to 96.5 cents as of yesterday's close. And in this period, OKA has also paid out a special dividend of 1 cent per share. So investors would actually be sitting on a pretty handsome gain of about 22%. Valuations-wise, OKA trades at a pretty undemanding PE ratio of 8.2 times and a price to book of 1.25 times.
Capital gains aside, what about its dividend payouts? Does it have a dividend policy?
Yes. To begin with, OKA does not actually have a formal dividend policy. However, it has consistently paid dividends for the past 5 years. This has ranged from 3 to 3.5 cents per share. Dividends for the 2014 financial year totaled 3 cents per share after a 1:2 stock split in May of 2014. All in, this translates into a pretty decent net dividend yield of 3.1%.
Now the Group MD, Mr. Ong Kun An, or OKA, which I would think where the company name hails from, owns half or slightly more of OKA. But how liquid is the stock if retail investors wish to get in?
Mr. Ong actually does own slightly more than half of OKA. According to the Edge Markets, OKA has an average trading volume of about 700,000 shares over the past 200 days. So actually it's not really that liquid, and this is probably because the stock is quite tightly held. Apart from Mr. Ong owning more than half, the top 30 shareholders, including himself, actually control 72% of the outstanding shares.
All right. So thank you for joining us today, Jian Ming.
Yes,
thank
you're welcome.
you.